St. Louis Fed President James Bullard warning that a sharper than expected slowdown in the U.S. is possible. And as a result, the Fed may choose to provide more accommodation, but will determine that meeting by meeting. Bullard speaking in Illinois. He is a voter this year. He dissented at the last meeting where the Fed cut by 25 basis points because he wanted to cut by 50 basis points. A big part of his outlook is he does not expect the trade uncertainty to go away in the months or the years ahead. Why? Because he said it's just difficult to reach a stable global trade regime. As to the impact, he says it's small in the United States, but it is larger globally. In addition to trade, Bullard in his speech highlights several downside risks, among them slowing global growth in the economy, which could feed into the U.S. economy, contraction in global and U.S. manufacturing, as well as slowing U.S. business investment, not to mention the signal from the inverted yield curve, which seems to suggest that policy may be too tight for where the U.S. and the global economy is. Bullard also said that monetary policy can't react day to day to the trade war, and these insurance cuts may help also recenter inflation. Let's take a very quick look before this speech at where the Fed probabilities were. There's a 56% probability of another quarter point cut. That would be the third this year, coming in October. And then you have to get, if you get to December, 72% chance. And then again, in March, the next cut, a second cut, is 54% right now. So, Kelly, a strong warning or strong level of concern from Bullard, who we already know is concerned, but it looks like he's taking it a step further in his rhetoric here.
And Steve, as you pointed out, we're 50-50 on the next meeting, which is the first time in a while we've had that kind of uncertainty. Now we have 6 weeks to clear it up, but people have pointed out that this week alone, in the Bullard vein, we're going to hear from a lot of the more dovish Fed officials, and I wonder how that's going to move markets.
I think that's part of it. 56%, I think that second cut is built in for this year with the question of does it happen at the October or the December meeting. That's why I'm watching those second cuts to see if they think it goes beyond just the third cut and whether or not that second cut gets moved to January. That would be a true expression of an even more dovish outlook by the markets on Fed policy.
Steve, don't you think the Fed's going to basically push it, to make it pretty clear one way or the other what they're going to do before we get to that? They're not going to leave it at 50-50 going into that meeting.
No, it generally is not. That's a great point, Kelly. In general, there's a lot of uncertainty looking past the next meeting. But as we come up to this meeting, the Fed, through its statements, through its comments, ends up really tailoring or winnowing down the possibility so that we tend to go into the meetings with good expectations for the meeting in front of us, but not so great for the meeting after us. It's like looking through one foggy window at the next foggy window and tell you what's beyond that.